But as that gentleman from LinkedIn was saying, people worry too much about prices, right? Think of the long game. The long game is that you want to have physical, and there will be one day where it will be really hard to get both physical gold and silver. Monday, June 23rd, 2025, Maneco 64, home of alternative economics and contrarian views. Yes, we're going to look at the markets towards the end. Surprisingly, things are fairly quiet, and I'll give you my opinion as to why that is later on. But what we're going to look at today is something even more important. And last night on my live stream, I spoke about how the bombing of Iran will massively hit the credibility of the dollar internationally. And I'm going to continue on that topic because there's some interesting news overnight concerning Germany and Italy, and the fact that there's a lot of pressure now politically for Germany and Italy to bring back the physical gold that they have with the New York Fed. Germany and Italy are the second and third biggest holders of gold, respectively. Yeah, surprisingly, Italy has a lot of gold, and a lot of it is at the New York Fed. So let's go through this article here that came out last night. And it's interesting because after we look at this, we're going to look at a cable from WikiLeaks from 1974 about the futures market and physical gold. And after that, we're going to look at an interesting post from someone I follow on LinkedIn. I've tried to contact him to have him on the channel, but he hasn't replied. So we're going to go through what he says as well. But let's skip towards this article in the FT. And actually, it was published 3 hours ago. So while I slept. And by the way, it's just gone past 8 a.m. London time. It says Germany and Italy press to bring $245 billion of gold home from the U.S. And it says here, Trump's attacks on the Fed and growing geopolitical risks reignite public debate about repatriating bullion. And I'm gonna also refer to President Biden. And of course, the official narrative is that people don't really know who blew up Nord Stream 2, that it was probably some Ukrainian agents, but there's that Pulitzer Prize winning journalist, I forgot his name now, American, Seymour Hersh, who basically proved that it was the Biden administration who organized the blowing up of Nord Stream 2, which is a German asset, supposed to be one of your closest allies. But in reality, America's allies are America's minions, right? Empires never have allies, they have minions. But anyway, enough of empire bashing. Let's go through this article. It says Germany and Italy are facing calls to move their gold out of New York following President Donald Trump's repeated attacks on the U.S. Federal Reserve and increasing geopolitical turbulence. Yeah, I think those factors are both really important. Fabio De Masi, a former Die Linke MEP, who joined the left-wing populist BSW party, told the Financial Times that there were strong arguments for relocating more gold to Europe or Germany in turbulent times. Well, there's the old saying, he who has the gold, has the power, right? It's interesting. It's funny that Fabio De Masi, I started reading that and I thought it was an Italian, but he's actually German. Anyway, Germany and Italy hold the world's second and third largest national gold reserves after the U.S., with reserves of 3,352 tons and 2,452 tons, respectively, according to World Gold Council data. Well, in the U.S., we don't even know actually how much gold they have. Just like the Epstein files and the JFK files, these things that were supposed to be released. There's a call for an audit. Even Donald Trump, President Trump, came out and said, we don't think we have our gold, but that's gone out the window. There's only one guy who's now public enemy number one for Donald Trump, Thomas Massie, who wants to see an audit. He's of course someone who also wants to see the Fed abolished. So there you go. I think Thomas Massie has been a big winner of the current crisis, especially in the last few days. He's become very popular, and it's a good thing. He's a constitutionalist. Both rely heavily on the New York Federal Reserve in Manhattan as a custodian, each storing more than a third of their bullion in the U.S. Between them, the gold stored in the U.S. has a market value of more than $245 billion, according to FT calculations. I mean, this would be a massive blow to the U.S. banking system, to the Federal Reserve. Of course, you read through here, there's the usual comments from the Bundesbank, the German central bank, that they still trust the New York Fed, and so on and so forth. One of the major Maloney's party, political party, who a few years ago, before she came to power, was pushing for the gold to come back. They're being very coy, but let's continue here, because there's a big campaign coming from taxpayers now as well. It says here, the Taxpayers Association of Europe has sent letters to the finance ministries and central banks of both Germany and Italy, urging policymakers to reconsider their reliance on the Fed as a custodian for their gold. And I quote here, we're very concerned about Trump tampering with the Federal Reserve Bank's independence. Michael Yeager, the TAE's president, told the FT, our recommendation is to bring German and Italian gold home to ensure European central banks have unlimited control over it at any given point in time. And the interesting comment that I found here, that I've been telling you for many years since I started the channel back in 2015, is this one. For Boehringer, the principal argument to bring home the gold is not linked to the current U.S. administration. And this guy says, he's an MP for the AfD in Germany. He says, gold is an asset of last resort for central banks, and hence it needs to be stored without any third-party risk, he said, adding that at times of serious distress, it is not just legal ownership, but physical control over the gold that really matters. So there you go. And with that, I'm going to skip over to, or go back in time as well, and look at this WikiLeaks document, because I want you to understand how important the physical market is, and also the futures market, and the fact that all this call for repatriation of physical gold is really decimating the futures market. And what's the futures market for? Well, in this document here, it's communication between the London bullion market dealers, the U.S. Treasury, and the U.S. Department of State. And this is prior to January 1st, 1975, when the U.S. made gold legal again. Of course, FDR made it illegal in 1933, and the United States decided to make it legal again. And yes, this is what the dealers say about the creation of a futures contract on COMEX. Yeah, the gold futures contract, which has this symbol GC, started trading on December 31st, 1974. Why December 31st? Well, because the settlement date for trading on that day would be January 1st. So you could technically buy that future and have it in your possession and then take delivery as well, because it was now going to be legal. But this is what the dealers are saying here, and this is what it's all about. It's how they're going to manipulate the physical market, which they've been doing since then. It says to the dealers, and these are LBMA guys, right? London Bullion Market. To the dealers, expectations will be the formation of a sizable gold futures market. Each of the dealers expressed the belief that the futures market would be of significant proportion and physical trading would be minuscule by comparison. Also expressed was the expectation that large volume futures dealing would create a highly volatile market. In turn, the volatile price movements would diminish the initial demand for physical holding and most likely negate long-term hoarding by U.S. citizens. So that's what the United States has been worried about since then. And that's what FDR was worried about. So they created the COMEX already existed. Silver futures were already being traded for years, but it was the creation of the gold futures contract that was really paramount. And of course, the U.S. Department of Treasury and State, they wanted to know what was going on and how they could negate long-term hoarding by U.S. Citizens. And yeah, it's another reason why you always hear people talking about, oh, gold is volatile, you know, you don't get involved. But this is all changing now. There's another article here, which I told you about, on LinkedIn by this guy called Peter Borgia. I'm not sure how you pronounce that. He's sounds like a Dutch name, but he's based in Dubai and he's in the gold market. And he recently posted this, and I'll go through it. He says, gold isn't just consolidating, it's cornering the paper market. So you see, it's the futures market, which the dealers talked about in 1974, which would negate long-term hoarding, is crumbling. So this is what he means, cornering the paper market. It means that paper market is just basically on its last legs. He says, while the media fixates on prices, yes, we always focus on prices, right? The real story is in deliveries. Since Trump's re-election, 817 tons of gold and 8,550 tons of silver have been stood for delivery on COMEX. Not trades, demand for metal. But COMEX net warehouse deliveries covered just 645 tons of gold and 7,146 tons of silver. That's a shortfall of 1,400 tons of silver in the physical market, slowly bleeding out. Silver looks volatile, but it's not noise, it's friction between paper promises and physical reality. No one's talking about it, but central banks are choosing possession over price smoothing. Yes, it's not just the taxpayers' organization in Europe that wants the physical gold back. It's also all the global South countries. It's also China, Russia. It's also Poland and others that that want physical. They don't buy futures. And I would venture to say that the smart money in the U.S. and Europe, they're buying physical as well, and that's completely unraveling the paper market, not just on COMEX, but in the LBMA. Is it any wonder we had a 4 to 8 week delay for spot delivery at the end of January? And I spoke about that. That was a really important milestone. Even the Bank of England's vaults have seen withdrawals that might not come back. At Iona, we don't just study price. We study what people settle when no one's watching. What happens when gold stops trading and starts vanishing. So that's his company, Iona. I hope he replies to me. I contacted him through LinkedIn. I also sent him an email. Maybe he will see that today. I did it over the weekend. But we've also got Steve Hanke, Professor Hanke. Steve Hanke, Professor of Applied Economics at Johns Hopkins. He posted yesterday, gold is leaving the vault. COMEX inventories are falling. Demand for physical gold is exploding. Buy gold, wear diamonds. Yeah, that's an old terminology in the markets, especially in the futures and commodities markets, which I worked in. And I think Professor Hanke, he did trade the commodities markets years ago. So yeah, that's an interesting one. Buy gold, wear diamonds. So just one more thing before we look at the markets. I just saw a post here from Weimar Silver Baron. It says Iran is now calling on other Middle Eastern countries to sell U.S. treasuries. And there's a headline here, your treasuries pay for the bombs. Get out while you can. Am I pro-Iranian or pro anything? No, as I've said many times in the past. But I've also told you in the past that by holding government bonds, you're financing governments. If you are okay with the U.S. bombing Iran, go ahead and buy treasuries. But if you're not, don't buy it. And the same thing goes for UK government bonds or gilts. If you are happy with what the government is doing here, go ahead and buy gilts and be ripped off. That's what happens when you buy bonds and they're inflating the money supply. But if you're not, don't buy gilts. Buy real physical money, i.e. gold and silver for that matter. So it's 8:20 a.m. London now. And as I said, I expected to see quite a lot of volatility. And I admit I've been wrong. We're not perfect, right? The markets last night, London time, they did open down. The stock market, they were down about 0.5%, maybe a little more. Gold did trade up to 33.98. Silver actually was down in the beginning of the day. The price of oil went up to, it went up to 77.75, so it didn't even breach the 80 level. And right now, actually gold is down about $14 at 33.55. But as that gentleman from LinkedIn was saying, people worry too much about prices, right? Think of the long game. The long game is that you want to have physical, and there will be one day where it will be really hard to get both physical gold and silver. But anyway, silver is up 13 cents right now, 36.11. The high's been 15. The low's been 35.81. So as I said, very little volatility. In the stock market now, the futures are virtually unchanged. The currencies as well. Crude oil is up less than 1%. The 10-year treasury yield, well, that's up 2 basis points at 440. So what do I think is happening? Is it a case of the calm before the storm? It could be. Maybe when Europe comes in for good, or when Europe really starts trading this morning, or the US comes in, things will change. Or maybe the current administration and the current president are so unpredictable. They change things around so much that people are just, they're just frozen. They don't know what to do. So they just don't do anything. They don't sell or buy, which is weird. So yeah, that's how I see things. And with that, I'm going to wish you all a very good day and a great start to the week. Take care. Bye.